Bitcoin dominance measures Bitcoin's market capitalization as a percentage of the total cryptocurrency market cap, indicating its relative strength against altcoins. High Bitcoin dominance, recently hovering near 59% as of late December 2025, shows capital concentrating in BTC, putting pressure on altcoins and signaling investor preference for Bitcoin's stability amid market volatility. Altcoin dominance, the inverse metric often tracked via the Altcoin Season Index, near 37 recently, rises when smaller cryptocurrencies outperform BTC, typically during alt seasons when BTC dominance drops below key levels like 50%, allowing capital rotation into riskier assets. Recent analyses suggest a potential mini altcoin season in early January 2026 if BTC dominance weakens around January 5 to 12, while its price rises past $96,000, though sustained altcoin rallies may depend on improved liquidity and macro easing later in the year. As of January 13, 2026, BTC trades near $92,169 with total market cap at $3.22 trillion, reflecting ongoing BTC strength but hints of altcoin recovery potential. Technical signals like RSI on ALT-BTC hitting oversold levels, MACD turning bullish after prolonged bearish periods, and historical cycle patterns such as ALT-BTC bottoming after 4-year declines mirror setups from 2017 and 2021 bull runs. Additional confirmations include rising ETH inflows, increasing spot volume over leverage, broad market breadth, percentage of alts above moving averages, Russell 2000 small cap outperformance, and improving liquidity from macro easing. As of early January 2026, the index nears 40 with BTC.D testing resistances around 59–60%, setting up potential for a 2026 alt season if these thresholds break. How to interpret BTC dominance drops for alts. BTC dominance drops signal capital rotation from Bitcoin to altcoins, often marking the start of altcoin rallies or alt season. Interpret these drops by checking if they occur alongside rising total crypto market cap, which indicates fresh inflows chasing higher risk alts rather than just BTC weakness. A drop below key levels like 55%, 54%, or 50%, especially after BTC peaks, triggers alt outperformance, as seen historically when dominance plunged during 2017 and 2021 booms. Confirm with volume surges in alts, oversold RSI on ALT-BTC pairs, or bearish BTC.D patterns like head and shoulders breakdowns for stronger conviction on sustained alt gains. If dominance falls but total cap stays flat, it reflects an internal shuffle with limited new money, tempering alt expectations. Recent context shows BTC.D testing 59–60% in early 2026, so a confirmed break lower could spark the mini alt season analysts anticipate. What BTC dominance threshold signals a true alt season start? BTC dominance dropping below 50–55% serves as the primary threshold signaling a true alt season start, as it indicates Bitcoin losing significant market share to altcoins amid rising total crypto capitalization. Historical patterns from 2017 and 2021 show clean breaks under 50%, especially after BTC peaks, triggering broad altcoin outperformance, with capital rotating into ETH first, then large caps, mid caps, and finally micro caps.
Drops below 51%, like late 2025's event, often mark early phases when paired with ETH/BTC strength and altcoin volume surges, though confirmation requires sustained decline past these levels without quick BTC.D rebounds. Higher thresholds around 60% signal initial weakness, but sub 55% is the decisive zone for true alt-season conviction, aligning with Altcoin Season Index readings above 75. Current early 2026 levels near 59% suggest monitoring for a breakdown to validate this shift.
How low must BTC dominance fall to historically trigger alt-season? Historically, BTC dominance falling below 50% has triggered major alt-seasons, as seen in the 2017 cycle when it dropped from peaks above 60% to around 35 to 38%, enabling explosive altcoin gains across market caps. In 2021, a plunge under 45% after BTC topped near $69,000 marked the true alt frenzy phase, with ETH BTC breaking higher and total altcoin market cap surging over 300% while BTC consolidated. Drops to 40–45% often signal peak euphoria and profit-taking zones, but the initial trigger consistently occurs below 50%, especially when total crypto market cap keeps rising, confirming fresh capital inflow rather than mere BTC weakness. Current levels near 59% in January 2026 would need to breach 55% first for early momentum, then sub 50% for full historical validation. Which altcoins historically lead after BTC dominance dips? Ethereum consistently leads altcoin rallies after BTC dominance dips, as investors rotate capital into smart contract platforms first, with ETH/BTC breaking higher during 2017. Dominance fell from 62% to 38%, and 2021, 60% to 42% cycles, where ETH surged 3 to 4x while BTC consolidated. Solana follows as a high-performance Layer 1 alternative, posting explosive gains like 12x from $20 to $250 in 2021's dominance drop, due to its speed and low fees attracting DeFi and DEX activity. XRP gains traction amid regulatory clarity. Chainlink powers DeFi oracles with 10x runs in 2020-2021. And Dogecoin captures meme-driven retail frenzy as excess liquidity flows to speculative assets. This sequence, ETH first, then L1s like SOL, utility tokens like Link, and memes like Doge, repeats historically when BTC.D breaks below 55–50% with rising total market cap. Which fundamentals made Chainlink and Solana rally historically? Chainlink rallied historically due to its decentralized Oracle network, solving the Oracle problem, enabling secure, real-world data feeds for smart contracts, which fueled explosive DeFi adoption in 2020-2021, as protocols like Aave, Synthetics, and Compound integrated Link for price feeds and risk management. Its partnerships with major institutions like Swift and Google Cloud further validated its utility, driving 10x plus gains during BTC dominance drops when capital rotated into DeFi infrastructure. Solana surged on its high-throughput proof-of-history consensus, processing 65,000 TPS at sub-cent fees versus Ethereum's limitations, attracting NFT marketplaces like Magic Eden, dexes like Serum, and later meme coin ecosystems post-2021.